Hi, and welcome to this video series for circular entrepreneurs on getting your project funded. Definite CCRI is an initiative for promoting the circular economy in Europe. Under the initiative, we started the Deal Engine to help you attract investments. Deal Engine is a flexible self-evaluation tool that you can use to assess the readiness level of your business and help you navigate through the due diligence process. In 20 videos, we'll share some practical insights on how you can increase your chances of raising capital. In the previous video, I shared an overview of the self-evaluation tool. Be sure to check this video out if you want a more complete overview of the Definite CCRI project and how you can benefit from it. In this video, I'll dive into what's already available in Europe's funding landscape. I'll discuss the typical financing tools and go over why circularity represents such a challenge for investors. Let's talk about the distinction between funding and financing. Funding refers to money provided, usually as a grant or investment, without the expectation of repayment. Financing involves borrowing money, like loans or credit, that must be repaid with interest. First up, talking about funding, the European Commission offers grants through programs like Horizon Europe and LIFE. These are designed to support innovation and sustainability. Regional, national, or supranational governments also provide funding through development agencies or funds from the European Union. This means you can tap into resources closer to home, tailored to your region's specific needs. This is also a great place to start. Depending on your level of maturity and development, different options will open up to you, from conception to when you start finding your first clients. Secondly, you have private capital providers. Venture capital funds, infrastructure funds, angel and impact investors are all looking for sustainable business models to invest in. Didn't find exactly what you were after? No worries, there's always the hybrid route. With public-private partnerships and blended finance mechanisms, you can get public and private actors to intervene and support you when each fits best. Bringing both public and private resources together actually creates strong support for your project. Now, let's explore the various financing tools available. First, let's talk about equity investments. If you're a startup with a scalable solution, venture capital or private equity might be your best bet. These investors are looking for innovative projects with high growth potential. For more established projects with predictable cash flows, you better look for debt financing. Examples of debt financing include traditional bank loans and green bonds, which are specifically designed to support environmentally friendly initiatives. Next up, grants and subsidies. These are particularly useful for early-stage pilots and innovation projects. They're often funded by public organizations. And the best part? It's non-dilutive, so you don't have to give up any ownership of your project. And let's not forget about alternative tools like revenue sharing agreements and crowdfunding. These are great for projects that want to engage the community or explore unconventional funding paths. Crowdfunding in particular can help you build a loyal supporter base from the get-go. Bear in mind that investors might find these projects challenging, even if you think you've got a game changer on your hands. Here's why. First off, circular economy projects are complex and long-term. Unlike projects that rely on a linear economy, they often need significant upfront investment in infrastructure or technology. And here's the kicker, the returns might take years to materialize. These projects also operate in fragmented value chains. They rely heavily on partnerships and collaboration across the value chain. This is awesome for innovation, but it can raise operational and investment risks. Another tricky part is that circular business models focus more on environmental and social impacts. This is fantastic for sustainability, but it doesn't always line up with traditional financial metrics that are prioritizing profitability. So, what does this mean for investors? It means they need to think outside the box and really get to know sustainability frameworks. When assessing the long-term potential of circular ventures, they need to look past just the short-term financial returns. To sum up, circular economy projects can be exciting, innovative, and most importantly, great for the planet. But they do come with unique challenges. There are plenty of funding and financing options out there, each with its own strengths. However, only a few will work for you, and we need to help you find out what works best based on your maturity level, your ownership structure, the pace of your growth, and much more. We'll delve into that soon. In 20 videos, we'll share some insights on how you can increase your chances of raising capital. We'll share insights into these different phases, provide checklists, and share some examples. Basically, I'll give you the tools to help your circular project grow and thrive. Be sure to hit follow or subscribe and check out the guidebook. Stay tuned for the following video, where we'll give you a financial checklist to test if your project is ready for due diligence. See you there.